In the Energy Quadrant today, the story is not really the percentage price change in crude oil, but the fact that crude oil is moving back down to those lows. Crude oil is down about 1/3%, but as I said, crude making its way back down toward those breakout lows in the $50 handle. 51.81, the low for today, again only down 1/3%. But there are technical people that look at triple bottoms as continuation patterns. The higher probability move is a continuation pattern down through those lows. We've been there about 4 times now. We're not there yet, but we've been there about 4 times, so that would be an extension low that might take crude oil back down to the 40s. Now, purely technically, today's low and the low we had a couple of days ago is actually looking like a preliminary double bottom pattern. A double bottom can actually be a reversal back up, but it needs to break that peak. Nowhere near doing that yet. So right now, technicians and price action watchers probably looking for more lows in terms of the probability trade. EIA cuts their price estimate for crude oil. The second quarter of 2020 is now $5 lower than it was before. EIA said they had concerns that there was still oversupply despite the disruption of 5% of the world's oil supply with the attacks on Saudi Aramco's refining capacity in the Saudi Arabia. So 5% of global crude products taken off the market, and we're right back down to where we were prior to that attack. EIA mentioned that specifically as one of their concerns, and their concerns in weakening demand shown in these particular estimates. And then lastly, tomorrow's EIA report due out normal time. We're expecting a build of 2.4 million barrels a day, according to S&P Global Platts survey of crude oil estimate analysts. So 2.4 million barrel crude, continuing those inventory builds, continuing the thing that the EIA is worried about by dropping their price estimates for next year.